Imagine waking up to find extra money in your bank account that you weren't expecting. For millions of pensioners across Britain this week, that's becoming reality. But here's what most people don't know. This isn't just one payment. It's a convergence of multiple financial lifelines arriving at the exact moment when winter bills are hitting hardest and Christmas expenses are piling up. Some pensioners could see hundreds of pounds landing in their accounts, while others might receive just a fraction of that amount. The difference? A complex web of eligibility rules that most people don't fully understand. If you're a pensioner or care for one, the next few minutes could be worth serious money. When millions of pensioners across the United Kingdom open their bank statements this week, they'll discover something many have been waiting for: an extra payment from the Department for Work and Pensions. This isn't a windfall or an unexpected bonus, but rather a carefully orchestrated series of payments designed to provide crucial support during one of the most expensive times of the year. For some, it's a modest sum that barely covers a grocery shop. For others, it represents a vital lifeline that can mean the difference between heating and eating. Either way, these payments are landing in accounts right now, and understanding what you're entitled to has never been more important. The story of these payments is one that reflects both the challenges facing older people in modern Britain and the complex web of support systems designed to help them. As December unfolds and winter tightens its grip, pensioners are discovering that multiple forms of assistance are converging in their bank accounts, each with its own eligibility criteria, payment schedule, and purpose. From the historic Christmas bonus that has remained unchanged for over half a century to early pension payments brought forward due to the bank holidays, the financial landscape for pensioners this month is more complicated than many realize. The festive season brings with it not just joy and celebration, but also a spike in household expenses that can strain already tight budgets. Energy bills climb as temperatures drop, food costs soar with the purchase of special seasonal items, and the pressure to provide gifts for grandchildren weighs heavily on those living on fixed incomes. It's against this backdrop that the DWP's various payment schemes take on their greatest significance, offering not just financial relief, but also a measure of dignity and security to those who have spent decades contributing to the nation's prosperity. The most widely distributed of these payments is the Christmas bonus, a tradition that dates back more than 5 decades to when it was first introduced under Prime Minister Edward Heath's government. Every eligible pensioner and certain benefit claimants will receive a payment labeled as DWP-XB on their bank statements. This payment, which arrives automatically during the first week of December, requires no application and is designed to help with the extra costs associated with the festive period. The qualifying week typically runs from the 2nd through the 8th of December, and anyone receiving state pension or certain other benefits during this period will be entitled to the payment. What makes the Christmas bonus particularly notable, however, is not its generosity, but its stagnation. Since its introduction in 1972, the payment has remained fixed at exactly £10. Back when it was first implemented, the weekly state pension stood at just £6.75, meaning the bonus represented a significant boost to household finances. It could genuinely help families purchase their Christmas dinner and contribute meaningfully toward gift costs. Fast forward to today's economic reality, and that same £10 note struggles to cover even the smallest turkey crown available at budget supermarkets. The mathematics of inflation paint a stark picture of how the value of this payment has eroded over time. According to calculations based on the Office for National Statistics Composite Price Index, if the Christmas bonus had kept pace with inflation since its inception, it would now be worth approximately £165. This represents a purchasing power loss that has not gone unnoticed by campaigners and pensioners alike. A petition calling for the bonus to be increased in line with inflation has gathered thousands of signatures, with advocates arguing that the most expensive time of year deserves more substantial government support, particularly given recent cuts to other forms of winter assistance. The petition's momentum gained particular strength following controversial changes to the winter fuel payment, which underwent a dramatic transformation in eligibility criteria. Previously available as a universal benefit to all households with someone above state pension age, the payment became means-tested from the winter of 2024 onwards. This shift means that only those receiving pension credit or certain other means-tested benefits now qualify for what was once automatic support. The government estimates that approximately 1.5 million individuals in 1.3 million households across England and Wales now receive this payment, down from the millions who previously qualified. For those who do meet the new eligibility threshold, the winter fuel payment represents a substantially more meaningful sum than the Christmas bonus. Depending on household circumstances and birth dates, recipients can receive between £200 and £300 paid directly into the same account that receives their state pension or benefits. The payment typically arrives in November or December, and for those who haven't received it by the end of January, the DWP advises contacting their winter fuel payment helpline. The restriction of this benefit formed part of a package of measures announced by the Labour government aimed at making immediate savings following an audit of public spending, with expected savings of approximately £1.3 billion in the first year and £1.5 billion in the second year subsequent years. The means testing of the winter fuel payment has sparked considerable debate about the balance between universal and targeted support. Proponents of the change argue that directing resources toward those most in need makes fiscal sense in an era of tight public finances. Critics counter that universal benefits ensure no vulnerable person falls through the cracks and point out that many pensioners who might struggle with energy bills fall just above the threshold for means-tested benefits. The complexity is further compounded by evidence suggesting that hundreds of thousands of households eligible for pension credit do not claim it, meaning they miss out not only on that benefit, but also on the winter fuel payment and other forms of support tied to it. Recognizing this issue, the government launched a pension credit awareness drive encouraging eligible households to apply by late December. This campaign aimed to reach the estimated 760,000 households who could claim pension credit but weren't doing so, with the promise that successful applicants could backdate their claims to September, the qualifying week for winter fuel payments. For those who acted in time, this meant accessing not just ongoing pension credit support, but also the winter fuel assistance that accompanies it. Beyond these headline payments, pensioners in certain circumstances may also receive cold weather payments when temperatures plunge. These payments of £25 are triggered when the temperature drops below 0 degrees Celsius for 7 consecutive days in designated postcodes. Recipients of pension credit, income support, income-based job seekers allowance, universal credit, or support for mortgage interest qualify automatically, with payments appearing in their accounts within 14 days of the cold snap. While modest in amount, these payments can arrive multiple times throughout the winter, providing repeated boosts when weather conditions are harshest. The Warm Home Discount offers yet another avenue of support, though its mechanism differs from direct cash payments. Worth £150, this discount is applied directly to electricity bills between early October and late March for those on the guarantee element of pension credit, or those meeting certain low-income criteria. Unlike other payments that appear as separate transactions in bank accounts, this reduction simply lowers the amount owed on energy bills, though its effect on household finances can be just as significant. Eligibility is automatic for those on qualifying benefits, provided their energy supplier participates in the scheme and the discount appears as a credit on bills rather than as money in hand. The timing of these various payments takes on additional complexity during the Christmas and New Year period when bank holidays disrupt normal payment schedules. State pensions, which are typically paid every 4 weeks on a day determined by the last 2 digits of one's national insurance number, get moved forward when scheduled payment dates fall on December 25th, 26th, or January 1st. Those whose pensions would normally arrive on Christmas Day or Boxing Day instead receive their money on Tuesday, December 24th, while those scheduled for New Year's Day receive payment on Tuesday, December 24th, December 31st. This early payment ensures pensioners have access to their money before banks close for the holidays, preventing any cash flow difficulties during a period when shops remain open, but financial services do not. Understanding which day of the week typically brings your state pension depends on a simple formula based on your national insurance number. If those final 2 digits range from 00 to 19, payment arrives on Monday. Numbers 20 through 39 mean Tuesday payment, 40 through 59 result in Wednesday deposits, and 60 through 79 bring Thursday payments. Those with numbers 80 through 99 receive their pensions on Fridays. This system spreads the administrative burden across the week and helps pensioners predict when funds will arrive, though the holiday period disrupts this regular pattern. The amounts pensioners receive from their state pensions themselves have also seen recent increases, offering welcome news amid rising living costs. Thanks to the triple lock guarantee, state pensions rose by 4.1% in April 2025, following the government's commitment to increase pensions in line with the highest of three measures: average earnings growth, inflation, or 2.5%. For those receiving the new state pension, this translated to a weekly payment increase from £221.20 to £230.25, representing an annual boost of nearly £470. Those on the basic state pension saw proportional increases, bringing the full weekly rate to £176.45. Looking ahead, the government has already announced the rates for April 2026, with pensions set to rise by another 4.8%. This will bring the new state pension to £238 per week for individuals and £363.25 for couples, while the standard minimum guarantee and pension credit will increase by the same percentage. These increases reflect the triple lock's continued operation and demonstrate the government's commitment to preventing pension values from being eroded by inflation, though critics note that other benefits will rise by only 3.8%, creating a disparity between pensioner support and assistance for working-age people. The cumulative effect of these various payments and increases creates a complex financial picture for pensioners navigating the final months of the year. A pensioner receiving the full new state pension along with the Christmas bonus, winter fuel payment, and potentially multiple cold weather payments could see several £100s in additional support beyond their regular pension income. However, this assumes eligibility for means-tested elements, which many pensioners living just above poverty thresholds may not qualify for despite facing genuine financial hardship. The broader context of these payments reveals tensions in social policy design. The shift toward means testing reflects a government seeking to target resources more precisely while managing significant fiscal pressures, including what officials characterized as a £22 billion hole in public finances. Yet, means testing creates administrative complexity, risks leaving eligible people unsupported if they don't claim benefits, and can create cliff edges where people slightly above income thresholds receive nothing while those just below receive substantial support. The alternative of universal benefits ensures comprehensive coverage, but directs public funds towards some who may not need them, raising questions about the most effective use of limited resources. For individual pensioners, understanding and navigating this system requires considerable effort. Checking state pension forecasts through government online tools, verifying national insurance contribution records, understanding benefit eligibility criteria, and keeping track of multiple payment schedules demands a level of digital literacy and administrative capacity that not all older people possess. Charities and advocacy organizations play a crucial role in helping pensioners access the support available to them, but gaps inevitably remain where vulnerable individuals lack the connections or capacity to seek help. The comparison between current payment levels and historical purchasing power also raises questions about the adequacy of support. While the state pension has been protected by the triple lock since 2011, ensuring it rises each year, the Christmas bonus's decades-long freeze serves as a stark reminder that not all elements of the support system receive equal attention. Campaigners argue that if the government values the symbolic gesture of a Christmas payment enough to maintain it for over 50 years, it should also value pensioners enough to ensure that payment retains meaningful worth. The £10 sum that once made a genuine difference now feels more like a token acknowledgement than substantive help. Yet for all the limitations and complexities, these payments remain important to millions of households. The predictability of state pension income provides a foundation of financial security, while additional payments, however modest, offer flexibility and cushion. The Christmas bonus may not transform anyone's holiday, but combined with other support, it contributes to a package of assistance that helps pensioners manage a difficult season. The winter fuel payment, despite its new restrictions, continues to provide meaningful help with energy costs for those who qualify. Cold weather payments respond to the most acute periods of heating need, and the warm home discount directly reduces one of the largest household expenses. The challenge moving forward lies in ensuring this system serves its intended purpose, protecting older people from poverty and hardship while using public resources responsibly. This requires ongoing attention to benefit levels, simplified administrative processes, improved take-up of means-tested support, and honest conversations about what society owes to its older citizens. The triple lock on state pensions represents a commitment to maintaining pension values, but questions remain about whether the broader support infrastructure keeps pace with the realities of living costs in modern Britain. For pensioners checking their bank accounts this week, the arrival of the Christmas bonus and other payments offers a moment of relief, however temporary. These sums represent not just financial support, but also societal recognition of the challenges faced by those living on fixed incomes in an expensive world. Whether the amounts prove adequate depends on individual circumstances, with some managing comfortably while others continue to make difficult choices between competing necessities. The payments landing in accounts this December carry the weight of history, policy debates, and millions of individual stories. Behind every transaction lies a person who has worked, paid taxes, raised families, and contributed to their communities, now navigating retirement in an era of persistent inflation and uncertain prospects. The support system they encounter reflects decades of political choices about the role of the state, the targeting of resources, and the value placed on different groups within society. As winter deepens and households face the coldest months ahead, these payments take on practical urgency. The £10 of the Christmas bonus may be spent on a small treat or absorbed into general expenses. The winter fuel payment could determine whether thermostats stay set at comfortable temperatures or get lowered to save money. Cold weather payments might cover an emergency purchase when temperatures plunge unexpectedly. Together, these elements form a safety net that, while imperfect and increasingly complex, continues to provide essential support to millions. The story of pensioner payments is far from finished. Future governments will face ongoing questions about benefit levels, eligibility criteria, and the balance between universal and targeted support. Demographic pressures as the population ages will intensify fiscal challenges while also expanding the number of people relying on these systems. Inflation, energy costs, and broader economic conditions will continue to shape the adequacy of fixed payment amounts and the real value of pension income. For now, pensioners receiving these payments can find some comfort in their arrival, even as many recognize that more comprehensive solutions to pensioner poverty and financial insecurity remain necessary. The DWP payments hitting accounts this week represent both an achievement, a system that functions however imperfectly to support millions, and an ongoing challenge to do better. As bank balances update with the label DWP-XB and other deposits, the question lingers: is this enough? The answer depends not just on the amounts involved, but on the lives of the people receiving them and the society we aspire to build together. So here's the bottom line. If you're a state pensioner, check your bank account carefully this week and in the weeks ahead. Look for that DWP-XB label for your Christmas bonus. Watch for winter fuel payments if you're on pension credit. Keep an eye out for cold weather payments when temperatures drop, and verify that your warm home discount has been applied to your energy bill. Don't assume you'll automatically get everything you're entitled to. The system is complex, and millions of pounds go unclaimed every year simply because people don't know what's available or don't think they qualify. If you're struggling financially, especially if your income is low, take 10 minutes to check if you're eligible for pension credit. That single application could unlock not just ongoing support, but also access to winter fuel payments, cold weather payments, and other assistance worth hundreds of pounds. These aren't handouts. You've paid into the system your entire working life, and this is your money. Make sure you're getting everything you deserve. And if you know an older person who might need help navigating these payments, reach out to them. Sometimes the most valuable thing isn't the money itself, but knowing someone cares enough to help you claim it. Stay warm, stay informed, and make sure you're not leaving money on the table that could make your winter that bit more comfortable.